Hi, everyone. Good evening. And on behalf of the Diversity and National Security Network, welcome. We have an exciting event this evening on perspectives on financial technology and cryptocurrency in the global economy, but you already knew that. My name is Michael Cecere, and I'll be moderator. And I'm standing in for Mohammed Soliman, who unexpectedly could not make it tonight. So apologies for that. But the great news is that we have a very distinguished panel of experts lined up tonight. And the makings for what I see as a very interesting discussion. So the plan right now is to do a round of quick introductions, and then I'll jump right into the discussion with our distinguished panelists, which will be followed by what I expect to be a fascinating and spirited Q&A. So without further ado, I'll kick it off with introductions, and I guess I'll start, and then ask our panelists to quickly introduce ourselves. My name is Michael Cecere, and I'm a non-resident scholar at the Middle East Institute's Frontier Europe Initiative. Previously, I served as an economic development policy analyst at the Congressional Research Service. And before that, I was an economic development and public finance practitioner at the state, local, international levels. Before I came to MEI, I was also an international security fellow at New America and a non-resident fellow at the Foreign Policy Research Institute. And here with us today are two very accomplished guests. Yahya Fanusi, who's an adjunct senior fellow at the Center for New American Security, and Ilana Aquino, chair of the board at Women of Color Advancing Peace and Security. Yahya, do you mind kicking us off and introducing yourself quickly?
Yes, hi, good evening, everyone. It's great to be here. I'm really looking forward to not only just discussing this, but also hearing from you all and having a conversation. I guess as a way of introduction, what I could say is, I sort of come from previously in the intelligence community. I actually have an intelligence background. I worked as an economic analyst and counterterrorism analyst at CIA for several years, but I've been out of government for a while, and I've been in the think tank space. And in that space, I focused on research dealing with fintech, crypto, all those sorts of things, and what the implications are for U.S. national security. So that's a little bit about me.
Great. Ilana?
Yes. So my background is in international economics, along with international development. So I come from the more development space. So I've worked with various nonprofits, global nonprofits such as Christian Aid, PACT. I've also consulted for various governments such as DFID, USAID. I've also worked with UNDP. So a plethora of organizations, both multilateral and non-governmental. In addition, I've spent a significant amount of time living and working in Africa, particularly East Africa and the Horn, as well as Southern Africa. So, and some Latin America experience as well. So my heart and passion at the moment is chairing the board of WCAPS, that's Women of Color Advancing Peace and Security. And our mission and aim is to feature women of color in security, national security, global security conversations, and all the different flavors of that, which definitely includes the global economy.
Wonderful. So we're very excited to have both of you here and welcome. And thank you so much for joining us. I think we're going to really be able to lean on both of your outstanding experience. So now I guess I'd like to turn to our discussion. I'll ask our guests to keep their remarks to about 5 minutes each max, so we can have time for a healthy Q&A at the end. And for our participants or for our guests who are watching right now, if you do have questions during the panel, feel free to input them into the chat, and we can use that as a way of getting through the questions. That'll be kind of the first cut. So from there, I guess I'll just launch into the first question. So in 2017, I think a lot of people remember this, Coinbase became one of the top apps in that app ecosystem that many Americans and in other countries use to purchase cryptocurrency, Bitcoin, Ethereum, a bunch of other types of cryptocurrencies. So I mean, I think one of the natural questions that certainly I have, and I think a lot of people have, is, based on that popularity, why did so many people suddenly flock to financial technology the way they did, and maybe to CryptCoin specifically? What changed? What was it about 2017 or the circumstances at the time? And maybe Yaye, you can start.
Yeah, sure. So I'll just kick it off. I mean, so what was happening in 2018? I'll be blunt. People found out that they could make a lot of money with crypto quickly because the price of Bitcoin was going up in 2017. Actually, in 2018, it had sort of gone down. I think it had reached its peak. But what had happened? Let me tell a little story. I'll bring this personal. So my son. So in 2016, my son, I forget what grade he was in, but I was, for me, trying to learn about Bitcoin and crypto. And my son was on spring break, and I asked him and his cousin, I said, hey, why don't you all do a research project for me on spring break and research the difference between Bitcoin and Ethereum, two different cryptocurrencies. And he did it. And I said, if you all do this, I will pay you $100 in Bitcoin. And the reason was I wanted to teach myself how to get Bitcoin, how to send it to someone. Like I knew very little. So it was a practical project for them and for me. And so I gave, so they did it, and I went to Coinbase, as you mentioned, which is very generic, very well-known cryptocurrency exchange. And I bought $100 of Bitcoin and I sent it to them. And for me, that was the first time that I really got exposed to crypto. But the funny thing, why do I mention this story, is that my son, who's in college now, and he's a senior, and he had Bitcoin before he had his first true bank account. Right. So to show you how things have changed compared to when most of us were coming up, what had happened is I would frame this as it's not that money is changing, but technology is changing. We're in the midst of new digital money formats. And what I'll say, this is how I frame it. We've always had digital money, right? We've always been doing, well, not always, but we've been doing online banking. We use PayPal. Digital, most people say, hey, I already have digital money. I do digital transactions. Like, I don't need this Bitcoin thing or whatever. Here's the difference. All of that digital money, those digital transactions, the digital money, if you call it, has always been owned by financial institutions. When you go to a bank, you're not really dealing with a digital dollar. And when you do your online banking, you basically have a relationship where it's a deposit and it's a liability with the bank, and they allow you to sort of transfer your liability to another bank or to a merchant, right? I don't want to get all complicated, but that's the nuts and bolts of it. Is these financial institutions always sort of control your access and facilitate for you. What the Bitcoin protocol did was, it really wasn't about currency. It was a new type of way of conveying data where we could see value as data. So, but the bottom line of it is, now getting access to this was very easy. You don't necessarily need a bank account. And this sort of spurred a lot of people to say, wait, you mean I could hold something that's value and maybe nobody can keep it from me? And so this, a lot of people have sort of taken on to this idea. So that's the point, is that we're in the midst of seeing competing digital money formats. One format is your Bank of America, one format is your Zelle and your Venmo. That's one sort of digital money. But now there's this other thing, Bitcoin, cryptocurrencies, and stable coins. And now we just have more options. And then there's also the ability for price rise. So that's why you have a lot of interest too. Right.
I love the way you highlighted that it really isn't as much about the currency as it is about the data. I think that is what is beginning to change and culminate into this kind of snowball that we're seeing now. I think around the year that you mentioned, in general, the way we work is changing. And of course, the pandemic hastened that. So if you hear all these conversations about the future of work, and you physically, in my experience, I am literally seeing people getting financial independence, retiring at 36, 49. And the cryptocurrency, the Coinbase, the way it's so accessible to the common person, um, makes those things much more possible. It's a kind of almost a democratizing, if you will, of those things that you could only really dream about in the past. Like, I'm going to have to work until I'm, XYZ years to meet my goals. And even then I may not have what I need to retire. So I think that change of work, the way we're working is affecting it. And I would also say just blockchain in general is changing the trust centers around currency. So we now where we would put our trust so much in the dollar or paper money or fiat, as it were, blockchain has now upended that completely, in the sense that it's very difficult for someone to counterfeit it, right? You have all these immutable timestamps. So people are attracted to that because there's a level of trust and faith that they feel that they can put into it. I don't want to say better, worse, these kinds of things, right? Because it's all still new. We're still exploring what regulations could look like in this area. But it may be a better way to look at currency where it's very difficult to counterfeit it or hack it because of these timestamps. So that's just throwing it out there, that for food for thought, and why I think people are jumping on the bandwagon.
Great. So I guess, in a related follow-up question to that would be why so many people, certainly in the tech sector, among ordinary folks, but even among certain policymakers, they look at financial technology and they look at cryptocurrency and they see its potential for disintermediation, and there's this idea that it can address aspects of wealth inequality. Why is that? Ilana, maybe you can kick it off since you were just on this on this vein.
That's actually my favorite part about being someone in international development. That's really my favorite part. If you just to take it back historically, when we started to see fintech experimentation and innovations coming through, one of the very first was M-Pesa in Kenya. And I was actually living in Kenya for about 7 years when it first was starting to take off. And we saw farmers, people in rural areas, people who don't have a bank anywhere near walking distance or driving distance, now being incorporated into a banking system. So that I think is the lure. And in Kenya, the advent of M-Pesa, they're saying, based on studies and research, has eliminated 2% of extreme poverty in the country. So it may seem like a small percentage, but if you're talking about one fintech innovation eliminating 2% of national poverty. So I think that crypto and having this be so, people's ability to stake their money and these kinds of things where they can get, interest and those kinds of things back and grow their wealth, it actually has a lot of potential to alleviate individual poverty.
Yaya, what do you think?
Yeah, I think it's I think what Ilana is getting towards is that the technology can really help people leverage gaining access to capital, access to markets. I mean, I think that's what I've sort of seen is that sometimes it's not technology itself, but it's what the technology can enable and allow you to do. So in situations where, because you think about what does mobile money give you, in an environment where maybe it's hard to use banks or you don't have a bank account. But if you're able, most people have phones, right? If everyone has a phone and if you can do transactions in the palm of your hand, it opens up. I like to say it, there's a lot of I sometimes will counter some of the cliche, the terms we use. Like there's the big term about banking the unbanked. And I actually I question it, because banking the unbanked is something, it sounds very good, but I really think that one of the big issues is it's not necessarily that you don't have the bank, but you don't have the market, or the market's not coming to you, or you're not in a market. It's almost like being more unmarketed. So what does mobile money allow you to? No matter where you are, now you can transact, because someone can come to you and then we can just operate in using our phones, right? You've sort of increased the market opportunity, so that's one way to look at it.
That's really interesting, and I like that, especially considering that there's so many people who, they may nominally have access to banks, whether by virtue of the internet or proximity one, but it doesn't necessarily fit their lifestyle or their everyday norms. So that's a really interesting point.
I'd like to add something, Michael, if I can.
Yeah, please.
In addition to just the potential of growing one's wealth or getting oneself out of poverty by investing in crypto, there's also the element that with blockchain's the immutability of the blockchain, you can actually store things. You know how NFTs, of course, or Nifties are getting so popular now, but the reason is because they're non-fungible. You really cannot transfer them. You cannot counterfeit them, this kind of thing. Now, I was actually listening to something, so this is not my own analogy, but I was listening to something recently where they were describing, what if there's a farmer, I'm back to the farmer. What if there's a farmer who, maybe there was a fire or something, he lost the title to his property, so he can't produce it to show that he owns this property, which is a center of his livelihood. What if he then goes to the government, but because there's some kind of prejudice against his group of people or people with his last name or something like that, the government, doesn't turn up the deed. So he can't get a copy of this thing. But what if he had it saved in blockchain and we all respected that would actually counted as a representation of his deed, then his livelihood is saved. So I think that is another example of how protecting important information could actually help to alleviate or restrict poverty in certain aspects.
It's very interesting. I want to kind of maybe flip it a little bit too, this discussion, because we've heard a lot about the kind of the upsides, the promise, the potential, but there's also a chorus that will ask, what about the downsides? What about the fluctuations in the cryptocurrency markets? Is there still some shuffling and settling to be done in that ecosystem for kind of a certain tier of cryptocurrencies to kind of establish themselves as the top type of alternative, and also by extension, and this doesn't apply quite as much to crypto, but certainly related, the question of security and in financial technology, how secure is your fintech? How reliable and trustworthy is it for the retail user or everyday people? How do you guys respond to that? What do you think of when you hear those types of questions?
I think where you're getting at is this is something new. So the adoption of it, actually, there's a bit of a learning curve for a lot of people. So what's happened to the crypto industry, I think, is, so first, it's important to understand that, crypto is an open source thing at its core, meaning that it's software that pretty much anyone can get. Like a Bitcoin, for example, right, is really, don't think of it as like you're actually sending something, because that's what we always say. I'm going to send that person so many Bitcoin. The way to think about it is you're actually not sending a thing. All that you're doing, all that's happening is the ownership on a ledger is simply changing from one address to another address. And so as you look at over time, this ledger, it's really just a record. It's like the ownership of 100 Bitcoin was over here under Elena's address. It didn't have her name, but that's her wallet. boom, 10, 20 minutes later, an hour later, that $100, now it's not with her, it is with Yaya, because I had sort of, I made this transaction. I sort of broadcast, okay, I have a private key and I can now change it. I don't want to get too technical, but then basically all I'm saying is that, so all you have access to, that's why it's all based on software. You having a private key is simply your proof that that ownership of that thing right there, whether it's an NFT, that it's clear. And maybe I should probably back up, because like some people, like, what problem did this solve? Like, that's like, why should I care? And I liken it to the internet. Why the internet was so great for most of us who came out of the 90s, in college. I mean, I know. Anyway, I mean, I don't need to date myself, but
you already did.
I know. I said the 90s in college. People are like, what? Yes, I was in college in the 90s, but yeah, my freshman year, I did not have an email. In fact, my funny story that I always share is that, I was up late at night, freshman in the dorm. This is 92, so I am dating myself. 92. I'm trying to go to sleep. My roommate, Ken Lee, is on his computer. He's on his computer and he's typing. I'm like, hey, Ken, what's going on? Why don't you go to bed? What's going on? And he's like, oh, I'm sending an email. I'm writing my friend. I'm sending an email to him, this thing called email. I'm like, email? What are you talking about? That's crazy, man. Go to bed. Because that was the first time I had heard of email. And it was like a year later, I got my own email. But on the internet, the way you send data is you simply copy it, right? You copy a JPEG, you copy an image. All you're doing is copying what's in your inbox and you're sending it to someone. The problem with money is that system doesn't work for transferring money digitally. You can't have $100 and copy it and then send it to someone, right? So Bitcoin pretty much just allowed people to have access. And in terms of the security, I think the issue is, if you lose control of your wallet, it's very difficult, if not impossible, to get those funds back, because there's not a third person who's sort of the intermediary. So anyway, I'm sort of rambling on, but that's maybe what they're talking about, that there's a little bit of a security risk in making sure you keep your private keys with you.
Right.
What do you think, Elena?
Yes. So also, I think that one interesting area that may be causing some of the insecurity is when the crypto is not working the way it was advertised or intended. So for example, Solana froze last week. So if you've been watching Solana, as I have, trying to see for myself when I should get in the game. They were doing very well for several weeks. And then last week, let's say they were somewhere around 160 something prior. Last week, they dropped down to like 120 or in the 120, 130 area dollars per unit. And what happened with everybody jumped in and was like, oh my gosh, I've been waiting for my chance to get in there because it might be the next Ethereum, it might be the next Bitcoin, and the system crashed. So they touted that they were one of these like 100,000 transactions per second, and that they could handle that. And then it turns out that they couldn't. So now people have been backing off. It really hasn't gone back up since that time. And if you are, familiar with this, it's 24/7. So it could have gone up anytime and it hasn't. So there's like a trust that's lost. However, and I could see where that could cause a lot of consternation, and people like, you know what, this thing really wasn't for me. Anyway, I like the stock market. It closes at, 5. I'm good with that. It opens at 9:30. Like, I sleep and my money's still where I left it. But I mean, 1,000,000 to 1. Solana's got some brilliant people working there. They're going to fix the problem. So it's kind of like, all right, yeah, there are a lot of snags happening and there is insecurity, but there are also many brilliant minds across the globe working on this because they believe in it. So I feel like, it's a time, a J curve that we're experiencing, and we may be somewhere in the bottom part of the loop, but it's,
Right. Great. So I mean, I would love to keep talking about some of this because I have some more questions to ask, and I'd love to get your views while I have you, but we have to be respectful of time. Since we are the Diversity and National Security Network, I think maybe let's turn it a little bit to questions of like security and international cooperation or competition. I mean, I would be really interested to hear what you guys think about on one hand, the current policy position on cryptocurrency in the United States as compared to some of the other big players in the global economy, like China is an obvious one, but maybe also a country like Russia. I mean, could you guys talk about the differing regulatory environments and to the extent to which they are kind of incubating or holding back financial technology, and maybe how this plays into some of that strategic competition or economic cooperation? And maybe Yaye, you can take a first stab at this.
Yeah, sure. The regulatory thing is something I focus on a lot, but it kind of depends on what types of regulations you mean. So it's funny, most people, it depends on your perspective. Some people say the US doesn't know isn't regulating crypto, et cetera. And actually it depends what you're talking about, because actually the US has been forward leaning in one type of regulation of crypto, and that's in anti-money laundering. So without getting too much into like the technicalities of it, basically the part of Treasury that deals with anti-money laundering regulation back in 2013 actually set out guidelines for the U.S. jurisdiction for if you want to do crypto trading as a business, you have to register. You have to be registered as a money service business. You have to follow certain anti-money laundering laws, AML we call it. You have to have KYC procedures, know your customer, like a bank or foreign exchange desk or company, right? You have to do all those things to make sure, or at least to try to mitigate money laundering. That was in 2013. And I did research a couple years ago where we looked at crypto and illicit activity. And the US actually had a much smaller percentage of illicit activity. That was because there was so much regulatory guidelines and guidance, when the rest of the world, especially Europe, had a lot of crypto activity, but like no money laundering rules. Because Europe the EU just like couldn't get itself together. So anyway, I say that to say it, I actually give the US an A on the AML part. Now there are other regulations. Yeah, I do, because I followed this stuff and I'm like, man, the US is like, other countries could learn from the US and US has sort of led that. But there are other aspects which I think the US is far behind. The security side, which I follow less of, but is very important, because you have some companies that are doing great innovative things, but if the SEC, if the Securities and Exchange Commission thinks that your project is a securities that's not registered, you're dead in the water, because that can prevent you from releasing your token. And that's what we kind of had happen with a lot of projects. So China, I will say before handing it off, China is something that is important to watch, because the Chinese approach is this. China is banning crypto. They've done steady over the past 3 years. They've cracked down on crypto trading. Now they're pretty much saying that Chinese citizens can't do any crypto transactions, even at foreign exchanges. They're clamping down. And what they're doing with the other hand is they're creating their own digital currency. And that's something I'm sure that we'll probably want to get into, central bank digital currencies.
Yes, I'll add to that. The infrastructure bill is coming up here, and Pelosi seems very confident that it will pass. I'm not on the Hill right now to know whether that's really accurate. And if it does pass, it has new ways in which you will have to report taxes on crypto transactions. So I don't know the specific details, or whether it's, if you do more than 10,000 in transactions, or what it is. I think it's every single transaction you now have to be able to open up your books and report on that. If this passes, so we're looking at it within the next week to 2 weeks, whether or not this would pass. So that is an additional layer. Will that reduce transactions? I highly doubt it. But it gives kind of, a hand into your pocket a little bit, which didn't exist before. But I would say, cryptocurrency is, despite the emerging regulations, the US is still creating an atmosphere in which it can grow and, not stifling as such. China, different story. However, the banning, as Yaya pointed out, is very clever. Sure, slow down everybody's access while you're building, your own currencies. Try and throw some blood in the water so that you can emerge with what you have going on. And they have, I guess, the power to do that. I question, and I really don't know the research on this, but I question, if they are continually banning, does that mean that at some point they're lifting the ban, or they really just can only actually realistically ban it for a certain period of time before people then kind of find ways around the ban, and then they have to ban it all over again? I would be interested to know, how long they think they can really keep doing this.
Can I give my thoughts?
Please.
Yeah. It's so funny because, maybe 4 years ago, 2017, when China first started to crack down, it was funny because so much folks in the crypto space basically had the idea that you can never shut down Bitcoin, right? So much mining has been happening in China. So the stance for, I think, most of us was like, okay, all right, but there's no way they can stop Bitcoin or crypto. And what ended up happening is, even though they banned crypto trading, what happened was you had personal informal over the counter, they call it, trading. So people would still get on Telegram and say, hey, I got some Bitcoin, who wants it? Then you text a person, okay, I'll send it to you there, or connect to my bank account. Trading was still going on for a few years. So there still had all this activity in China. So most of us were like, man, well, I guess, it's just kind of a formality, but Bitcoin, crypto's still in China. But then things started happening. Then, about a year ago, the Chinese government, the CCP, the Chinese Communist Party said, and the People's Bank of China said, no, we're going to now mining. You can't have mining operations. They started to crack down harder. Then they even more recently, they came down and said, not only no mining, but other businesses, there are other tangential businesses that if you have an exchange, you would have. They started going over those second tangential businesses that exchanges. They really started to crack down. And so now, what's the lesson here? For me, I think the lesson is, you can't never underestimate the power of an authoritarian government, unfortunately, because not that China's going to be able to forever stamp it out, but what we're seeing in China now is a full-fledged effort to prop up their own digital currency, their central bank digital currency. They are going full-fledged to integrate that within the whole society and within the whole economy. There's a bigger sort of data play there that I'm sure we can talk about later. So my sense is that, yeah, there are going to be people in China that have crypto. You're still going to have that. But it's going to be difficult for businesses in China, crypto businesses, to on the cryptocurrency. They can do blockchain stuff, but the cryptocurrency is going to be a no-go, I think, for the foreseeable future in China.
I think you both have raised some really interesting points. And, when I look at it as kind of a layperson, at the individual trees, as it were, it does seem like this sort of whiplash in China, where at one point, China was kind of held up as an example of a major economy that was embracing cryptocurrency to a certain respect. And then there's that long pullback to then we get to, I guess it was late last year, where they had that kind of cutting motion where they kind of shut off the spigots. But then, in the way that Ilana and Yaya, you guys have put it, it really resembles more traditional Chinese industrial policy, where it's not so much that they've formed an opinion about cryptocurrency itself, so much as that they are using the power of the state to develop and to incubate a kind of minimum viable product of their own, an indigenous capability in this central banking digital currency. And, you know, maybe that's the long game. So, you know, very interesting points here. And I think there's a lot more ink to be spilled about some of those things. Yeah. And maybe relatedly, if I can ask, I mean, you know, judging from things like what's happening in China, what's happening in our own country, what is that future role of financial technology? Where do you see all this going? And is the future something like China, where there's going to be dueling national type of digital currency systems, or is it going to be more of a laissez-faire type of approach? I mean, how can it shape the global economy, national security? And one example that comes to mind is I had a friend of a friend who told me about in Lebanon, they had a massive currency devaluation, and then there was a ban that was actually put into place about allowing capital to leave Lebanon because there was such high inflation and a lot of issues there. And so there was a brief window where some of the cannier businessmen were able to get capital out of Lebanon by utilizing cryptocurrency. And so, you know, you can see some very clear, like, you know, geoeconomic, but also, you know, national security and strategic type of repercussions from something like that, particularly if you project that on a greater scale. So where do you guys see as the future? Is it going to be something like China? Is it going to be a lot of variation from country to country? Ilana, maybe you can take a stab at this.
I'll start to dig into that. What I see, my sense is that you're seeing countries hanging back in some ways, looking at the models that are being presented to them to see what looks like it's working, before they then go ahead and say, okay, this is how it's going to be in country X. So I think that there's a lot of waiting and seeing how are the regulations playing out in the US? Is the complete ban working in China? Will, you know, the centralized digital currency work? Before countries come forward to say, all right, we're going to use some combination of this or some combination of that. So I think at the moment it's watching the outliers and the forerunners to see where other countries will fall out. And I'm very sure at some point, maybe not in the too distant future, we'll be having, you know, convenings on this at the multilateral level to now maybe look at global regulations.
Yeah.
And I think that I think this is going to be a near-term issue, although it depends on what you think is near-term. In most nations, I think there's a running theme that I'm hearing. Different countries varied from, you know, in Nigeria, I was at one meeting with a conference where there were these Nigerian central bankers, and the term kept coming up: monetary sovereignty. And I'm hearing that from other corners, you know, from central bankers, from nations, because once they started to see that stable coins, that crypto was you know, taking the naira, was that people were using Bitcoin instead of the regular sort of banking system. And now with China, so China about to unveil its currency, the whole Libra, which is now Diem, that whole Facebook thing, got all these government, you know, leaders to start thinking like, wait a second, we can't have a world where, you know, people are not using our currency and they're using this other external digital currency, whether it's Chinese, whether it's Facebook, whether it is Bitcoin, you know. So monetary sovereignty is going to be, I think, a political issue and a geopolitical issue. Now, what's the future look like? You know, it's all going to be answered by the norms and the priorities and the culture and the policies of individual countries. I don't think in the US that, you know, we would do something like banning cryptocurrency. That's not the approach. And also if you know, many countries are going to come up with a central bank digital currency. A lot of them are looking at China, but the US is still sort of on the fence. And I think the world that we're going to have is this idea of competing digital money formats. Some countries might be like El Salvador. Salvador basically just recently said Bitcoin is legal tender, and we're going to make merchants accept Bitcoin, right? That's one model. And maybe that fits, or some people would say it doesn't. Some people would say it wasn't enacted properly, but maybe that fits their situation where they have a dollarized economy already. Maybe it makes sense for them to use Bitcoin, but other countries that might not be the same. So everyone's going to have to figure out what works for them.
We have a few more minutes, so I want to quickly ask one follow-up question to that. In terms of how countries are kind of looking at how they're adopting digital currency and sort of what the real game looks like down the road, isn't one of the chief value propositions of something like a Bitcoin or another cryptocurrency, it's international and global transferability. And how do you see it playing out with on one end of that spectrum, a China kind of cultivating and incubating its own national digital currency, and then on the other end of the spectrum you have this transnational adoption of an established private, currency like Bitcoin or Ethereum or something like that. How do those things interact, and what happens to the digital currency space when you're looking at that spectrum?
Yeah, I mean, I can jump into that. My gut that I want to say, and we'll see how this plays out, but I think it's a slippery slope towards decentralization. I don't know. I don't know how long countries can really hold out. One of the other value added to me that cryptocurrency brings in is that it makes each individual, their own bank. They get to have their own say about what it is that they want to lift up in their lives without having to really interact with the prevailing traditional fiduciary aesthetic. So that in itself now creates 8 billion banks. I mean, I think that's what we're looking at. And so can one country, 2 countries, 10 countries hold out against that? Probably for a while. But again, I do think it's a slippery slope towards decentralization. And I think that we have to now cope with this new reality. Yaya mentioned, the internet in the 90s. I think that's where we are. The train has left the station. So now it's time for us to figure out how best, we can exist with this new reality.
Yeah, any thoughts?
Yeah, I think new reality is the right way to think about it, right? We've been saying for the past year and a half, the new normal, right? And the new normal now is that there are different formats of money. I don't think that there's going to be one coin to rule them all. I think that the reality, I think Bitcoin is here. Digital currency, cryptocurrencies are here. People, you're not going. Again, China is a bit of an extreme example, right? But you're not going to be able to. The world isn't going to be able to remove Bitcoin or crypto, even if China does what it does. So it means that there's always going to be this, these permissionless crypto assets that are out there. Now, where we may dispute, more people will argue is, well, how much are they going to scale? And I don't know. I'm not convinced that Bitcoin will replace, fiat currency, but I do think that Bitcoin is going to have a use case, and it's going to have, and even if that use case is speculation, some people might say, oh, that's just, it's not really worth anything. Maybe it's not, but it is a use case. That is the use case of why it's being used right now. So it's going to be here, but then these central bank digital currencies are going to be here as well. And that's a new reality too, because now we're talking about a currency that has data attached to it that your central bank would have access to. And it raises a whole lot of other questions. So it's really going to be interesting. I think buckle up. I don't give predictions because we don't know the future. But my thought is, this is my one like random prediction I just put out for fun, because we can test to see if this actually does happen. What I'm going to say right here on this Zoom call now, that 2024, during a presidential debate, the question about the U.S. having a digital dollar or central bank digital currency will come up. I can imagine that, because I think it's going to take, people are already talking about, Congress already obviously is talking about it. And I did a hearing actually about a month ago where it was about CBDCs at the House Financial Services Committee. And I could see how CBDCs was becoming a partisan issue already. I could already see that there was different sides of the aisle had formed certain views on CBDCs, which I'm not happy about, because I don't think this should be a partisan issue. So I can just imagine that the next presidential cycle, the question of should the U.S. have a digital dollar could be a debate issue.
Well, you heard it here first, folks.
And I could be wrong. I could be wrong, but I just want to throw it out there.
Ilana, do you want to end with a prediction as well, just for symmetry?
Well, definitely 2024, we should be having this panel again, so we can circle back.
Right.
My hair will be white by then.
I predict that the individual person is going to find a way to come up to create value in this space in ways that we have not even imagined. I think that many smart people are thinking of how to create NFTs for themselves, are thinking of how to add their data to blockchain to protect it, are thinking about how to increase their wealth. So I don't know if I have a particular prediction, but let's just go with the 2024 election. I think that in addition to possibly discussing, central bank digital currency, we might be seeing a lot of questions coming up in the debates about regulation for, the average person or the broker who is trading in crypto.
Great. And, maybe we can sell, speaking of which, maybe we can sell this a recording of this event NFT for $5 million. So if there's any takers, reach out.
5 million Bitcoin.
That's right.
Wow. That's house money there.
Well, on that extremely serious note, I do want to open the floor to questions, if there are any in the audience, because we have this great panel here, and it's a great opportunity to have some more discussion about this. I don't see any in the chat, but if anyone wants to kind of raise their hand, please feel free.
I have one quick question. Sorry to step in so quick, but I have more about the wealth piece. Do you? I know you have to be very careful on how we talk about wealth in digital currency or just crypto in general, but I might have missed the conversation about why people believe the evolution of cryptocurrency or fintech helps with wealth and also changes our mindsets when it comes to financial literacy. But can you kind of elaborate more why people still believe that now, after we all went through the period of 2017 to 2020, where a lot of people have downloaded their Coinbase accounts, and then we're just buying so many different coins?
Asha, I'm trying to understand your question.
Do you think after the period from 2017 to 2020, right? Everybody downloaded their Coinbase accounts, and they bought a lot of cryptocurrency, and then it seemed like it plateaued where there was okay, we giving up on this, but it seems like there's a reemergence. Do you think people are still they're regaining their confidence back in this realm?
Yeah, Ilana, Yaya, is that a market fluctuation thing? Is that a the emergence of certain technologies? What's responsible for that?
Can I jump in, because this hits a chord with me, because I think that the challenge is that what was happening in 2017 that most folks were hyped about was not really the most sensible thing to focus on. So when you just had a price rise in 2017 that got people excited because the price of Bitcoin was going up and people were making money. People that got in, oh, I should have mentioned like my son's story, right? Because it was like my son had $50 of Bitcoin. So a cliffhanger, right? Like, did he keep it? Did he he
and now he's a millionaire.
Right. And now it's like, this is our great the Riviera that we're recording from. No. That it's not paying his tuition, I'll tell you that. Anyway, what I guess the point I was trying to say was that because I used to speak, I remember in 2017, like I was so excited about crypto and Bitcoin and blockchain, and I would try to tell folks, especially folks in my circle and network, like we need to pay attention to this. But it's not to, just to buy Bitcoin or buy crypto. Like that's not the strategy for like a whole community of people to gain wealth. I mean, it might be it's like a good stock, like maybe, but we don't say like one stock is what everyone needs to invest in to like take care of the wealth and the financial needs. It's just, that's like a small part. Like if you are going to get into crypto, understand the heavy risks, understand, especially in 2017, when everybody was coming up with a token, you get a token, you get a token, you get a token. Obviously there were lots of scams. I mean, there were scams, right? So you had, because there was a low barrier to entry to create tokens and there was all this hype, there had to be a bubble. So the point for me, why this hits a chord, because I taught a course on an intro to blockchain course at Morgan State University in 2018. And we think that was the first HBC blockchain course formal. I mean, that's my story and I'm sticking to it. And
get that on Coursera.
I know, I got it. Exactly. But the point is that the students at first, like everyone was into crypto because of the speculation, like, oh man, I got to get this coin, right? That's kind of what I think drove a lot of people. But the point we try to get through in the course is that, first of all, that's risky. That's not the story. The story is, what can this technology enable and what might be the business opportunities, the entrepreneurial opportunities, the industry that can grow from this technology. That is the key thing. And if I could end with my last thought on, what I started with my friend, my roommate in the email situation, this hits home for me because I went to, college in the 90s. I was in the Bay Area. So in the 90s, 92, 97, I was in the middle of like where Silicon Valley, where the tech boom happened. And I was an economics major. I knew nothing of it. I mean, of course I like had an email and, et cetera, but like, I was not aware of the tech, the internet, like what was happening. And because I was looking the other way, like a whole industry came up that I was, I was not connected to. And I'm concerned that could be the thing here. If we just focus on, the price and Bitcoin, et cetera, like that's the small stuff. The main stuff is what will be the companies that are built from this new type of money and this new type of technology. That's the thing that I think that we have to focus on.
And I would say people are growing their wealth. So while it's so interesting, as Yaya is mentioning, that all the innovation that can come from this. And the small regular person, such as myself, I'm not saying I'm growing a ton of wealth, but I don't know enough yet. However, I'm seeing people be really successful with this in their own individual ways. Is it making millionaires? I don't mean, maybe some of the lucky, right? But I do think, to your question, Asha, that people still are finding ways to grow their wealth with this. And but it takes a different kind of awareness. So I'm much more used to, your mutual funds, you kind of set it and forget it. But this is a 24/7. You might, have a power bar and miss a huge opportunity, or all of a sudden now you find this windfall that you didn't have 5 minutes ago. So it's going to take some rewiring of how we look at currency, how we look at wealth. It used to be that, you save, and that's really how you build your wealth. This is a different animal. And whether we love it or don't love it, it is an animal that's worth starting to really understand how it moves and how it lives and how it breathes.
Let me ask you guys something, because I sense a little bit of difference in the answers there, which is great. And I think what everybody wants is the future of crypto and digital currency, is it, as for the ordinary person, is it more an instrument or an asset class? And it sounds like from Ilana that you're saying it could be both. And Yaya, you're saying it's a little bit more on the instrument side. Is that a fair characterization?
I don't know. I don't think maybe I don't see the distinction. I mean, I think it's an asset class. I think it's, crypto assets are something that you can invest in. This is not financial advice, but that you can see that as an asset class. But what do you mean when you say an instrument? Like, you mean
so more of a mechanism for facilitating certain kinds of transactions and business, rather than as the thing that you kind of put money into to see the appreciation and a certain rate of return. I mean, you don't have a bunch of college kids, jumping into like Forex trading the way that they have been in, crypto, for example, right? You don't have people kind of timing their trading of the Russian ruble, So what does it look like?
You do, but they're on Wall Street. And not the college dorms.
Fair enough. No, I know. And no, but, there's certainly a class of folks who are doing that. There's always going to be, right? But is that a retail type of situation?
I know a lot of people that are, I mean, a lot of people. Well, so maybe it's, maybe there are different segments, right? Because I think maybe what Ilana is pointing to is that they're, because a lot, like especially the decentralized finance idea of staking, doing all these things, like there are a lot of people getting into it that they get the accounts and they start earning money, and so it is maybe more accessible than some of these other more fancy financial investment strategies. So it's like opening up something to a new segment of people who maybe wouldn't have they wouldn't be doing stuff that hedge funds do, right? They wouldn't be going to stock trading. So I think that is happening. I'm just falling more on this side. I mean, I do fall on the side. I think I'm more cautious in the sense that because I see so much in the crypto space, there's so much opportunity, there's so much innovation, but I also see the bad side. I mean, I'm just gonna be blunt. The bad side meaning, the fact that people get taken advantage of easily because they're looking for the, all the glitter's not gold. I mean, do I have time for like one quick anecdote? Because I think this is good. I love these anecdotes. Yeah, can I give me like 40 seconds? So I'm speaking, this is 2018. I'm speaking at this, it's this meeting of bankers, compliance bankers, and it's in Miami. I'd never been to Miami before. And this was, I got to sit you the scene. It's on Miami Beach, and it's on the beach. And I'm talking about crypto and like national security and money laundering. And the audience is bankers. These are all compliance bankers, like, C-suite folks. And I'm teaching them. And every time when I start my presentation, I always say, okay, before I start, raise your hand if you own crypto. Right. And I would raise my hand because I didn't have a lot, but like, I bought a little bit of crypto, and none of the bankers, of course, raised their hand. None of them. But guess who? Because this was out on the beach at a restaurant, guess who did raise their hand? All of the servers, the wait staff, the sound guy, the audio visual people, like they all and it was funny because people were listening to the lecture. It was like, they were like, the busboy would like hang around because they wanted to hear the lecture and stuff, hear the talk. So what does that show you, right? It showed you that it wasn't a certain class or sector of people that were into this. It was the regular Joe Blow, the person, the busboy, the waiter, waitress, et cetera, et cetera. And but here's the cautionary tale. So after my talk was over, I'm finishing, I'm grabbing my stuff, and like one of the guys, I think maybe it was like the sound guy, he was like, man, I really like it. He was like, man, I really like you, like the thing, your talk. And he said, hey, but what do you think about token blip? I'm not going to say what token it was because I don't want to get anyone upset. But it was an obscure token. It wasn't like Bitcoin, Ethereum. It was some token I had never, like, I had to go back to my hotel room. I was like, what token was that? I've never heard of that thing. But he was like, what do you think about it? I think it's like the next best thing. And and you could see how excited he was. So I didn't know that much about it. That was 2018. So recently, because that name stuck in my head, I looked that up like a couple of weeks ago, and that token, I think it ICO'd it. It was issued for like 25 cents, and it's now worth like less than one, like 0.0, like 1 cent or something. So it lost 98% of its value. So what am I thinking? What am I concerned? I'm not, buyer beware. Understand that in this mix of so much opportunity, so much activity, you have to be smart. You have to understand that there are sharks out there as well. Because it's easy to create stuff, that there are going to be some minefields. So I'm not someone who's like trying to poo-poo on crypto, but I'm just saying, like, we got to understand, like, the stuff is real, that there's some traps out there as well. We can't have blinders on. And people, because you don't want people to like invest all of their stuff and it's gone because of the hype. So that's the thing we just have to be careful about.
Agreed.
All right. Any other questions, Alana, unless you have anything additional to add to that?
No, just agreeing and looking for, those regulations that will protect the average person.
Any other questions? Well, on that, I think it's a good place to stop. And I just want to thank our wonderful panelists for a truly illuminating and spirited discussion. And of course, thank you to the Diversity and National Security Network for putting this together. And I look forward to seeing if those predictions pan out. I'll be watching the 2024 debates very closely, and I'll send you guys some notes if your predictions come through. Thank you. Thank you all again.
Thank you as well for moderating, Michael. Thank you, everyone. Thank you to the panel as well.
Thank you so much. Great meeting you all.